There is still a lot of confusion around the new 9% UAE corporate tax that went into effect last year in the year of 2024. This year, the year of 2025, is the first year when you have to file your tax returns, and the deadline for that is September of this year to file for last year. But still, despite the fact that we've already had a full tax year, many people still don't understand how this tax actually works. So I have right here in front of me the actual UAE corporate tax law that includes all of the details around who has to pay this tax, who is exempt, if anyone at all, how the tax is calculated, how much you can deduct in salary to pay for yourself as the director of your company, how this affects free zone companies, and all the other details that you need to understand about the UAE corporate tax if you're running or thinking of running a business here in the UAE. There are misconceptions around this tax on both sides.
You have people saying like, oh, don't worry about the 9% tax. It doesn't apply to free zone companies.
That is complete nonsense. And then on the other side, you have people saying,
oh, the UAE is dead now. Every company has to pay 9% tax.
Which is also not true. And because there is so much misinformation, you don't know who you can trust, you should have the exact same mistrust towards me. Why should you listen to me over all these other people? Well, it's pretty easy to answer that question because my source is the law directly. And if you don't believe me, in this video, we're going to go through the actual law for all the important parts that you need to understand about the UAE corporate tax. And I will show you the literal law as I am going through this, so you know that I am not full of crap. Before we get into the video, if you're looking to move to the UAE, if you're looking to set up a company here, then I recommend that you book a free call with my team down below in the description. We have helped more than 400 people set up companies here in the UAE. And the reason we got into this business is because so many other companies, other consultants, agents out there simply don't tell their clients everything they need to know. They don't register their companies properly. We have so many clients who have come to us after using some other companies who did things wrong, and then their visa got denied or they didn't get banking or something like that because many agents simply don't know how to do things properly here. It's a full service package, and the pricing for that is one of the lowest that you will ever find. But the service, the quality of the service is higher than pretty much any competitor out there. If you don't want to take my word for it, just look at our reviews, look at other companies' reviews, and that should tell you the story. So if you're interested in moving to Dubai, book that free call down below in the description. So here we have the corporate tax general guide for the United Arab Emirates. First thing we want to talk about is who is taxable. We find that on section 5 on who is subject to corporate tax. Here, taxable persons. So persons subject to corporate tax are known as taxable persons. In broad terms, corporate tax applies to juridical persons, which just means basically companies that are incorporated in the UAE, or foreign juridical persons that are effectively managed and controlled in the UAE. So two things here. Number one, any company that is registered in the UAE is liable for corporate tax according to this law, and that doesn't depend on where that is managed and controlled. So this is one downside of UAE companies. Even if you run that UAE company from outside the UAE, the corporate tax law of the UAE will still apply to that company. That is the first thing to understand. The second thing is that even foreign juridical persons, so foreign companies that are effectively managed and controlled in the UAE, will be liable for corporate tax. So the way management and control is defined in the UAE tax law is broadly the same as it is defined in most jurisdictions. And we can see here that it says it needs to be determined with regard to the specific facts and circumstances of the juridical persons and its activities. And a key factor is where commercial and management decisions are made. This could be the place where the highest level of decisions that are essential for the management are made. This is always a question of fact, not question of what it says on paper. You might have a company where on paper it says like, okay, there's some board meetings abroad, but if the true factual management of the company is from the UAE, that company will be managed and controlled from the UAE and taxable in the UAE. So this deals with the case that so many people will tell me like, oh, why can't I just set up a US LLC and then be exempt from this corporate tax? Well, it doesn't work because it's not just UAE incorporated companies, but also foreign companies that are managed and controlled from the UAE that are liable for this tax. So outside of this, corporate tax also applies to non-resident juridical persons or non-resident companies that have a permanent establishment in the UAE. So you might have a company whose management and control is elsewhere, but you run that company for a part of the year with a permanent establishment, so the fixed place of business in the UAE, Corporate tax would also apply usually for the income that is attributable to that permanent establishment. And importantly also, it applies to natural persons who conduct business or activities in the UAE and have a turnover of over 1 million dirhams. So even if you never set up a company, but you run essentially business activities in your personal name, that is again not a way to get around this tax. So that is who is taxable. Essentially, basically what this means, to simplify, is any company or any business activity that is run factually actually from the UAE. Next, does this apply to free zone companies? We can look here again in the definition of resident juridical persons. Examples of juridical persons that are incorporated or otherwise established in the UAE include blah 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 blah, and down here, and other entity forms that have a separate legal personality under the applicable UAE mainland legislation or free zone regulations. So yes, free zone companies are treated within this definition of juridical persons incorporated within the UAE. There are some exceptions. We can look here on free zone persons. There are some types of activities that are exempt, that are treated as what is called qualifying income. But if you just look at the definitions, basically most people will not qualify for this. So when a free zone person meets certain conditions, it will be considered as a qualifying free zone person and eligible for a 0% corporate tax. Right here we see qualifying income derived from transaction with other free zone persons, except for income derived from excluded activities. So if you only deal with other free zone companies in the UAE, you could be treated as a qualifying free zone person. Income derived from non-free zone persons, only in the case of qualifying activities, and we can see qualifying activities over here. So we have manufacturing of goods and materials, processing of goods and materials, holding of shares and other securities, ownership, management and operations of ships, reinsurance, fund management, wealth and investment management, headquarters services, treasury, financing, distribution of goods and materials. You can read through this, but basically most people watching this video are not going to have these kinds of companies. Sure, if you have a mining company or something like that, you could benefit from this and get 0%, but most people, like content creators, e-commerce businesses, software businesses, whoever, the corporate tax will apply to you. But the next topic of Releifs is quite important, and this is actually something that most people will be able to benefit from. We can see this in section 7, Releifs, and section 7.2, small business relief. So small business relief is provided to eligible UAE businesses and reduces their corporate tax burden and compliance costs in the corporate tax. And this is important. Any eligible tax person with revenue, so revenue, not profit, equal to or below 3 million dirhams in a relevant tax period and all previous tax periods can elect to be treated as having no taxable income in that period and will not be obliged to calculate its taxable income or complete a full tax return. So basically what this means, if your revenue for your business totals below 3 million dirhams, around $860,000, you are treated as a small business and you can benefit from this small business relief, and you are not going to have any tax liabilities because you will be treated as if you have zero taxable income for your entire business. This is very, very important to understand. Most people watching this video are not making more than $800,000 a year. And if you don't, you still have 0% tax legally. Next, what type of income is going to be taxable? Well, in generally, any revenue, any business income you make in the UAE will be taxable. There's again some exemptions. We can see here exempt income, domestic dividends. Dividends and other profit distributions received from a resident person are exempt from corporate tax. So if you have another company that is paying dividends to your company, so let's say you have a UAE company and the UAE company owns, let's say, a US LLC that is also a resident taxable person in the UAE, and you pay dividends from that US LLC into your UAE company, there's not going to be any corporate tax on that. This is a question that many people have asked me when I've told in my previous videos that I own a UAE company as well as a US LLC. The US LLC is also taxable in the UAE. It is a resident person, so there's no tax in between the dividends paid from the US LLC to the UAE company, so there is no double tax there. And you also have exemptions for example, foreign permanent establishment. So if you have a UAE resident person with a permanent establishment somewhere else, so in a foreign country, you can make an election where any income and associated expenditure in these foreign permanent establishments will be exempt from corporate tax in the UAE. but the resident person and the foreign permanent establishments must be treated as separate and independent businesses. And also it is important to understand that this exemption will only apply to the foreign permanent establishments which are subject to corporate tax or tax of similar character to corporate tax in that other foreign country at a rate of not less than 9%. So you really cannot escape this 9% corporate tax if you have a UAE company. And again, this only matters only if you make above 3 million dirhams a year in revenue. If you don't make above that, then none of this matters because you don't have any taxable income. And there's some other ones that are more niche that you can read about in this section. But then talking about deductions. So general, roughly from reading these, works the same way as deductions would work in any other country. But it is important that any deductions need to be wholly and exclusively for business purposes. And another thing I want to highlight here is this one, entertainment expenditure. So entertainment expenditure includes expenditure in connection with meals, accommodation, transportation, admission fees, as well as facilities and equipment used in connection with entertainment that's relating to like entertaining customers, shareholders, suppliers, or business partners and things like this. So I've seen people who think that, let's say you go out for a meal with a business partner, you can just pay for it with your business card and you can deduct the whole thing. In the UAE, it doesn't work like that. We can see is that as this type of entertainment often contains a private element that would prevent the expenditure from being wholly and exclusively incurred for business purposes, only a 50% deduction is allowed for corporate tax purposes in all cases of this type of expenditure. So let's say you're going out for a meal with your business partner who's also your friend, so it's kind of a business meeting but kind of not. You can only deduct 50% of that expense in taxes. And this is, I think, different to some countries, but that is just good to be aware of that I don't think many people are aware of. Non-deductible expenses will be, well, a bunch of things that makes a lot of sense. Important thing to note, dividends and profit distributions or benefits of similar nature paid to an owner of the person. So any dividends you pay to yourself, any like bonuses, etc., cannot be deducted. That is important, but you can deduct your own salary, but there are restrictions to this. So people might think like, okay, I make 4 million dirhams, why can't I just pay myself a salary of 4 million dirhams and then I have no taxable income? Doesn't quite work that way, because we have this rule over here, transactions between related parties and a connected person and transfer pricing rules. So when two parties are closely linked, so we have two like related parties. So for example, here we have your company and yourself, who are related parties to each other. Related parties must apply the arm's length principle when entering into a transaction. This means that the price of a transaction between related parties should be the same as if the transaction had taken place between two unrelated independent parties. So, for example, when you're paying yourself a salary from your company, you can, of course, compensate yourself however much you want. It is your company's money. But for corporate tax purposes, you can only pay yourself a salary that is within this arm's length principle. So practically, if you imagine that you hired someone else who's not you to do the job that you do, how much salary would you pay them? So there's different estimates, and you need to speak to a professional, an accountant. Again, obviously we can help you. You can book our call to determine exactly how much you would be able to pay, but you cannot just pay all of your income, all of your revenue to yourself and think that you can deduct this in taxes. It doesn't quite work that way. In reality, they would allow you to deduct whatever is reasonable for your activity, your business, and then the rest of it would be treated as dividends or bonuses or something that is not deductible in taxes. So finally, we need to talk about administration. So who needs to register, how to register, when to file your taxes, things of that nature. So we find this here, registration and deregistrations. All taxable persons should register for corporate tax. So this means that anyone, whether or not you can apply for the small business relief, you have to register for corporate tax. Very important to understand. There's probably a lot of UAE businesses that have not registered because they don't know this, because the agent or whoever they use didn't tell them. We always tell our clients, like, we even do this all for you, so you don't need to worry about all of this, but that is good to be aware of. And I made a previous video on exactly what the deadlines are. Now, the deadlines sort of depend on when you register your company, whether you have a UAE company or a foreign company. So I'm going to direct you to watch that video for all the details on exactly when you should register. But basically, what I recommend you do is just register as soon as you get your company so you don't forget. Or if you use us, then we will obviously just do it for you. So in terms of how to do accounting, taxable persons that earn revenue that does not exceed 3 million dirhams may use cash basis for accounting. Everyone else should use the accrual basis of accounting. They do not need to be audited unless you make revenue more than 50 million dirhams a year, or unless you are one of these qualifying free zone persons, which most of you are not going to be. And tax returns will be due within 9 months from the end of the relevant tax period. So for example, a taxable person with a financial year ending 31st December is required to file their tax returns and pay corporate tax on or before 30th of September of the following year. So for the last year of 2024, by September of 2025, like I mentioned before, is the deadline to file and pay for this corporate tax. Again, I would recommend doing this sooner rather than later, and we'll make future videos on exactly how this payment is going to be made and things like this, because this is the first year when we have to do this. So that covers most of the broad points that you should be aware of regarding the UAE corporate tax. I hope that clarifies things. Again, these are not all of the details. There's more nuance and things like that. You should always speak to an accountant. Again, this is not tax advice, not financial advice, just my interpretation of this law that we were looking at in this video, and that will also leave down below in the description. Again, if you're looking to move to the UAE, you want to set up a company here and you don't want to deal with all of this yourself, you want someone to help you that has done this hundreds of times. We have helped more than 400 companies set up here in the UAE. You can get that free call in the first link down below in the description, and we can help you not only set up properly, but also to keep your business 100% compliant so you don't get into any issues, you don't get any fines, anything like that. With that said, if you want more details on how to register for this corporate tax, where I show you exactly how this registration should be done, you can watch this video right here. And with that, I will see you in the next video.